Let's bring in Carson Group's Ryan Detrick. Ryan, great to have you on to really freshen up your view of what this market can do. You know, in so many respects, this market's been kind of behaving as it's supposed to behave, right? Earnings have been going up, stocks have been advancing as well. Seasonal strength has been redeemed. You got the post-election kind of tension release rally. Where do you think that leaves us on this perch heading into next year?
Yeah, Mike, thanks for having me back, and hope everyone had a great Thanksgiving out there. So, I was on, I think it was the Friday before the election with Judge, talking about all the VIX spike and all the puts coming in. We expected to see another strong November. Well, like you said, we're having another strong November, but this year has really played out. I mean, what do we know about December, right? We still think there's more to go to this overall bull market, but really more specifically over the next, 4 to 5 weeks. We know December's up more likely than any other month, up like 74% of the time. It's the most likely to be up in an election year. It's the third strongest year overall, but the second strongest in an election year only to November. Last thing here, Mike, to think about. When you're up a lot going into the last month of the year, like we are, we're up 20% or more going into the last month, like we are. I went back like 40 years. The last 10 times this happened, December's been higher, 9 of them. Up 2.4% on average, so better than average returns. A lot of stuff I just said there. It's a bull market. We still think it's going to be a chase into the end of the year is the best way to put that.
Yeah, and that sort of underlines the idea that usually strength begets strength in markets, and it's not something that you pull forward gains and then you're left with give back necessarily. But how are you thinking about things like, well, sometimes the third year of a bull market, which we're just in now, is a little bit less generous. First year of a new president's term sometimes is choppy. And even after you've had these years like this year, we're going to hit the 53rd record high of the year for the S&P. When you've had those clusters of new highs, usually it's still a bull market, but again, often a little more of a turbulent period at some point over the following year.
You're right, and we're in that camp. We still think it's a bull market, yes. But, Scott, you had a great discussion earlier before I came on. Scott talked about some of those other areas that are taking the baton, right? Small caps, mid caps, industrials, financials. I mean, it doesn't mean just tech has to be the leader here. There's going to be other groups, I think, is how we see this. And, the other thing I think is so I hate to say, though, this time is different. Believe me, you hear that, turn off the TV, run the other way. What is happening right now, though? We have really strong productivity in our country for the first time since when? Since the mid to late 90s. When you have strong productivity, go back and look in the history books, everyone. You tend to have higher GDP, higher earnings growth, and better stock returns, right? We gained 20% 5 years in a row in the late 90s. We're not saying that's going to happen again. But when you have the higher productivity like we see here, Mike, we think, again, those are reasons to think this bull market's alive and well. Probably don't gain 20% next year, full disclosure. But listen, between 10 and 15, maybe closer to 15, it makes a lot of sense still with the strong productivity and overall strong economy we still have here.